You know things are bad when Wall Street and the mainstream media finally admit that they are alarmed by the U.S. consumer.
It's definitely highlighting the slowdown that we're seeing with the consumer right now.
Consumers on the cusp of a significant slowdown.
Credit cards are maxed out at over $1 trillion, with delinquencies hitting levels not seen since 2007. Savings are practically non-existent, and there is a growing retirement crisis, thanks to inflation that continues to make the cost of living near impossible for many.
Over half of Americans say their salary just isn't enough to cover the cost of living anymore.
The question that the U.S. government must finally reconcile with is what happens when the U.S. consumer stops spending. The U.S. economy runs on you and me and what we spend, the consumer. In fact, consumer spending accounts for nearly 70% of the United States' total GDP. And while this might feel normal in America, not all countries are so reliant on consumer spending. If you take China, for example, they are an investment-driven economy, which means that infrastructure and manufacturing accounts for half of their GDP. And while there's nothing inherently wrong with having a consumer-driven economy, there does come a point where the machine can't keep running if its driving force can't afford to keep spending. We saw this play out in 2020. When no one was leaving their houses, the government quickly realized that spending was going to stop, hence the creation of stimulus checks. While they were presented as a way to help the American people, they really were created to help the American economy. Since then, the U.S. consumer has continually been praised as strong, as some kind of hero, propping up the U.S. economy and preventing supposedly a recession. But let me ask you, who is actually responsible for propping up the economy? Is it a miraculously strong consumer defying all of the odds? Or is it actually the government spending a ridiculously large amount of cash and just pretending that it's the consumer all on their own? What do you think? Tell me in the comments below. Because if the government is funding its own economy, that might work fine in the short term. But in the long term, you risk rising debt levels, increased inflation, and a growing dependence on government intervention. Sound familiar? So how did we get here? And is there any path forward that can stop what is becoming an increasingly alarming pattern of economic volatility? Following World War II in the late 1940s, America's economy was booming. Jobs were plentiful, wages were growing, and people were ready to spend. In fact, during this time period, spending was considered you doing your part for your country, helping to rebuild post-depression and as part of the wartime effort. But what started as a patriotic effort soon began to shift, not accidentally, into a consumer culture where buying was associated with prosperity and success. The 1950s saw the rise of the suburbs, and spending for the home had never been easier with all of these new modern appliances. Cue cars, washing machines, toasters, all types of products designed to create a newer, better, modern American family. Suddenly, every American family had a TV in their house, which created a new direct way to market to families for things they never even knew they needed. This laid the foundation for the consumption culture we have today and created a boom of spending on non-essential goods and services. This period also aligned with the introduction of credit cards, making it easier for families to finance their lives in a way they never had before, keeping corporate profits high and the economic machine whirling. As this spending mania continued, it led to overproduction in U.S. factories. This came at a time when foreign competition was growing because of low labor costs and new trade agreements, which ultimately led to the deindustrialization of the United States, instead prompting new technology and service sector jobs to replace what once was manufacturing. And while this shift wasn't positive for everyone, as you can imagine, those in manufacturing often felt displaced. It created a growing divide between the have and the have-nots. It is true that the increase in U.S. consumer spending prompted economic growth in a way that probably wouldn't have happened otherwise, stimulating the economy and creating tons of new jobs. But this shift has created many new challenges. As more Americans become reliant on debt to finance their standard of living, this leaves more people vulnerable to higher interest rates, something that the government has admitted is a serious concern, but have done little to stop or prevent because the sad truth is the government needs people to keep spending in order to keep the wheels turning. And as the manufactured demand for more grows, we all can feel the pressure intensifying. Nothing is ever good enough, and with the advent of social media, we can feel the trends, the cycles around clothing, decor, accessories, technology happening at a much more rapid pace. This pacing, which is getting faster every single day, creates a culture that is more interested in immediacy over ingenuity and quality, further hurting the prospects of reliable, steady economic growth, because what we have created is unsustainable. This dependence on the U.S. consumer to continue to spend has created extreme vulnerabilities, because if the consumer suddenly runs out of funds, now we have a situation where there are layoffs, there are business closures, unemployment is rising, all of which of course create a terrible recession. And as our society continues to prioritize short-term gains and immediate gratification, the chances of any government risking economic slowdown or temporary pain for the sake of real long-term change becomes almost non-existent. Instead, there's only one answer left, which is continual government interference. It's going to be direct payments, tax cuts, and more social programs, all of which leads to higher national debt. Higher national debt that leads to inflation. Inflation that leads to higher cost of living. Higher cost of living, which means people can't spend as much. Do you see where I'm going with this? Which brings us to today. The United States will unfortunately continue to erode our purchasing power through government overspending, especially given the fact that there is less demand for foreign U.S. holdings than there has been ever before because of the inability of the U.S. dollar to maintain its value. This is why there has been an increased demand globally by central banks to hold gold, because gold, unlike the U.S. dollar, maintains its value, and there cannot be more of it printed out of thin air. This is also why on an individual level, so many people have been turning to gold, making sure that they are diversified outside of the dollar as this continual process of erosion picks up steam. The reality is a consumer-driven economy is reliant on its consumers, and U.S. consumers are over-leveraged and unable to spend the way that they once were, as is evident by delinquent auto loans, record 401k hardship withdrawals, non-existent savings, and maxed out credit cards with high interest rates. And as more Americans run out of options for financing their lives, spending will continue to slow down. The Federal Reserve has cut rates in an attempt to save employment, but the reality is that U.S. businesses are reliant on the U.S. consumer, and any kind of strength that the media has claimed in the past that the consumer had was just an appearance, an illusion, because the reality is that any strength the consumer had was all financed. And as we head into November from both sides, it is very clear that tax cuts and more government spending are absolutely at the forefront of how to fix this problem, which means that we can anticipate more government debt, which means a declining value of your dollar, which is an unfortunate thing for anyone who has savings or has assets that are dollar denominated, because at the end of the day, all of those assets, all of those savings are at risk of losing their value. This is exactly why I tell people, do not wait to see what is coming next when you already know what's coming next. If you believe that the U.S. consumer is over-leveraged and is falling behind on their mountains of debt, which I believe most of you do, and we know that the U.S. economy is heavily reliant, 70%, on consumer spending, then it does not take a lot to realize that ultimately there is going to be government aid. There is going to be more government debt, which again will mean less dollars in your pocket. The value of your existing dollar will be worth less in the future than it is today. And if any of this is concerning to you, I highly recommend talk to one of our expert analysts. Not only are they incredibly well-versed in what's happening on a macroeconomic level, but they have years of experience in helping people just like you make sure that you're protected outside of the system from what's coming next. Make sure that you protect your wealth, because we all know that it is so important, especially with what's coming next. And as always, I thank you for being here. I'm Taylor Kenney with ITM Trading, your trusted source for all things gold, silver, and lifelong wealth protection. Until next time.